Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Doug Faron with us from sunny Florida, but it looks like it's not quite sunny right there. He's going through a little bit of a storm.
Not today.
Doug is a developer with tons of experience, over 15 years, private equity and real estate experience. He's overseen $10 billion with a B of real estate investments and development. So plenty of experience and stories to go over, I'm sure. Doug, I told you before we got on here, we like to start with stories. Why don't you start us off and tell us how you got into real estate?
Sure. So, it's funny. My first exposure to real estate, my freshman year in college, roommate's dad was a developer. And I didn't, at that point, know much about real estate development at all. My parents were lawyers. But we talked a bunch about it and, ended up, later in college building out a real estate investment club at undergrad. That's it was cool. Really fun. So he was my first exposure, sort of like a taste early on. I started my career in investment banking and M&A. So I did some real estate, but really across all industries, and then worked in corporate private equity before moving back to real estate when I joined the CIM group back in 2012. So sort of roundabout way back into the real estate industry.
Very cool. So this club that you started in college, did you guys actually close deals, or were you like just getting together?
Yeah, I think the nomenclature was probably like aggressive. It was more just, we brought in speakers and, advocated for sort of more real estate classes at school. But it was a fun group. And interestingly, a lot of the folks that started are still in the business. So it's interesting.
Yeah, that's awesome. I always wish that I would have got started a little earlier than I did. But it's cool that, you had that experience with your friend's dad being a developer. At what point, you were in private equity, it sounds like. At what point did you start closing your own deals, as the GP?
Sure. So, it's funny. I was in corporate private equity, and really just like on the side, nights and weekends, I bought a building out of bankruptcy in 2009, sort of interesting time in like the financial crisis. And that was a small personal deal, but like taught me a lot just about the process, and was, great first outcome. And I went from there to sort of tie up a small hotel asset that I was looking at buying. That actually ultimately didn't end up transacting, but it was enough that I was doing it sort of nights and weekends that I decided I wanted to see if I wanted to shift my focus from, more corporate private equity to real estate private equity. And that was, again, part of the impetus that when I went to business school, I focused on finding jobs in the real estate space. And that's what led me over to CIM.
Nice. Very cool. And did you immediately go? I mean, it sounds like you didn't immediately go into development. That was a ways down the way. At what point did you start doing the actual development of properties?
Sure. So, it's interesting. CIM is, a 35 billion asset manager. So they operate really across as an allocator, but they're also fully integrated. So they do their own development deals. And at the firm, you sort of operated as your own small team within it. So I was fortunate there to, both acquire some big existing deals, work on a couple of developments that we did there. So that was sort of an interesting training ground. And that really led me to the ability to start this business, with my partner, Nick, about 2 years ago. So, I spent some time working on developments at CIM, but really launched Shoreham Capital in earnest at the end of 2021.
Nice. And do you guys, what's your thesis? Do you guys do only single family? Do you do multifamily? What's your primary development goal?
So we raise capital from a collection of family offices in a GP fund format, with really a focus around residential. Our mandate is what we call 75% residential, 25% special situations. The idea there being, I have investment experience in hotels, office, retail, multifamily, data centers, industrial, all of it. So I didn't want to sort of turn that off if we found compelling deals. But the anchor to this business that we thought was interesting was really a residential focused strategy, which spans everything from ground up development of traditional multifamily apartment complexes, value add acquisitions of that, and then also alternatives. So adaptive reuse of office or hotel to resi, senior, student, and a big anchor to this business, really something we were excited about building a platform in, is build to rent. So my partner Nick is a regional home builder, owns a company called JNS Homes. And what brought us together was sort of this thesis of, if we could put together the execution portion of the construction, which works a little different than it does in traditional multifamily with a GC. We could add sort of his experience as a GC to my background sort of in development and investment. We could build a compelling platform, because there's $80 billion chasing this build to rent trade, and there aren't that many institutionalized developers doing it. So that's been a big anchor to what we've been doing so far.
Very cool. And for everybody listening, go over build to rent as a strategy.
Sure. So, I mean, single family rental broadly is this category that, gets tossed around, but it really can be a couple of different verticals. There's scattered single family rentals where people are just buying homes and, renting them in neighborhoods. We're really more focused on what we call build to rent, which is, typically 100 to 300 homes in a single community, amenitized. And so think about like a garden style apartment complex, but instead of having, 1 and 2 story apartment buildings, we have either townhomes or detached homes. We tend to focus on larger unit sizes. And the idea is we want houses with garages, ideally, and backyards that give folks the advantages of living, in a single family home, which the millennial generation, which is entering, sort of household formation need, baby boomers who don't want to own their homes, want to tap into the equity, want. And so there's this big demographic shift for this product. And we're trying to add to that sort of the hospitality elements of a amenity center and pool, and really give people that accommodation they're used to in the apartment building they might live in, but with the advantages of a single family home.
Interesting. And so I'm assuming these kind of communities, these built to rent communities, they perform best in larger markets, or are you guys also doing this in secondary, tertiary markets?
Our geographic footprint is East Coast, Southeast, Sunbelt, we say, but we're really looking at sort of growth markets within the Southeast for this product. Now, we like what we call infill build to rent, which is different than infill multifamily. Infill multifamily is like, downtown Main and Main. You just don't have the acreage to do that with townhomes and single family in Main and Main, but you do want to be, less than a half an hour from employment centers, proximate to retail. You want to be in these locations that are, convenient places for folks to live, both from a work and, sort of enjoyment, retail perspective. So we're focused on Tampa, Charlotte, Raleigh, Durham, Nashville, Savannah, Charleston, Jacksonville, Orlando, St. Pete, Naples, growth markets in the Southeast where we're seeing this, sort of growth of population and growth in employment.
Yeah, that makes sense. We're just closing an RV park out in Charlotte right now.
Amazing.
Yeah, that Charlotte is just blowing up, and we actually have family out there, so great market. Okay, and so you said 75% is the residential, this build to rent product that you guys are trying to take to market. What is the 25% special through data centers out there? And that's something that I know nothing about. Nobody in my circle invests in data centers, so I don't really know how it works, and I'm just more out of curiosity. Where do you buy data centers? What kind of cap rate do they trade at? Just give me a little bit of information about investing in data centers.
Data centers are a really interesting vertical, a real growth vertical. And if you think about it, at its core, what it is a building that houses servers. And, with the growth in all sorts of new technology, specifically, obviously everyone's talking about AI right now, right? The amount of, sort of data processing capacity that AI requires means you've got, huge tailwinds in this industry. There needs to be a lot of data centers built to sort of deal with all this data that's growing. So what do you need for a data center? You need, access to fiber. You need and ideally, fairly stable weather, because you don't want extremes. The servers themselves generate a lot of heat. So you're trying to figure out a box that you have this great access to high-speed internet, but you also need all this electricity to power them, both to cool the building and to power the servers. So the power allocation usually becomes the constraint. And there are hubs where there are a lot of it. So Northern Virginia is a big hub for data centers, but there's in every major market, there's some that are sort of in the Main and Main downtown. Like some businesses need to be like directly adjacent to the data center, like high frequency trading, for example.
Mm.
Other times you see data centers that are sort of further out from main and main to get, more land, better access to power. But there's a number of growth markets for it. They trade, very tight cap rates. And so it's an interesting vertical that we're definitely spending time on. We haven't transacted yet, but it's something that we're keeping an eye to and seeing if we can find a good opportunity. It's pretty operationally intensive, so whether we partner with someone who sort of is an expert in it, operations intensive, just like having the right tenancy, depending on sort of how the data center is structured. So it's something we got an eye on, but would want a real deal of scale with an angle to sort of get started in that vertical.
Huh. I would assume those would be triple net, correct?
Yeah, but it's not so much the like actual operating of the data center as much as it is like tenanting it and making sure you have the right relationships with tenants that populate the data centers. If you're building on spec, or if you're building for a company, obviously, if it's a build to suit, if you've got a great site that someone wants access to, that's easy. But a lot of these are multi-tenant, and sort of being in that industry can be very helpful.
Huh. Interesting. So yeah, one thing that we like to talk about here a lot is markets, because if you invest in a bad market, it's really difficult to turn that around. So I always like to hear, especially people investing in areas that I'm curious about, what are your favorite markets and why? You've already mentioned a few. If you could just take like the top 3 markets that you really see a lot of potential, why do you see that potential, and then which ones are they?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Interesting. So, I mean, the filter that we're overlaying on markets is, something that people have been investing behind for a long time. It's high quality life, low cost of living, low tax, right? Like those 3 drivers have had population employment shifts for the last 10, 15 years even. But, COVID really sort of poured jet fuel on that migration. And you saw huge population moves into a lot of the markets we talked about before, the hot Southeastern markets, the Nashville, Raleigh, Durham, Charlotte, Tampa, et cetera. I think for us, with that huge population move, while there may be some small amount of, rebounding back to some of the major markets, there's enough that is sticky where we're seeing like a real shift in, who is in these markets, what employment is in these markets. And as a result, we think there's it's sort of cliche to be like, oh, we invest in the Southeast. Well, but now that you have this new anchor of people and jobs, I think the next 10 years here is going to be really interesting. You're seeing, a tapering in rent growth today because we had such astronomical growth, and with sort of rates rising and everything else, you're seeing a height. But we still think the kegger, the growth line for these markets is going to be really impressive. And if you had me pick 3 of my favorite, I mean, Tampa, we really like. It's got incredible framework as a city in terms of great airlift. It's incredible high quality of life. There's a ton of waterfront there. And it's, if you compare it to South Florida, it's starting at such a lower cost of living base. You've got a lot more room to run. Now it's become much more expensive over the last 3-4 years after COVID, but even so, it's still much more inexpensive relative to South Florida. So you might be able to move a corporation from, Illinois or, Westchester down there, and you could have, lots of good housing for all different types of employees, which I think is growth. And then you add to that some of the investment that Cascade and Jeff Finnick are doing there, the Water Street development, which is truly impressive. So we're very bullish there. I'd add to that, I mean, Nashville, great anchors in terms of, healthcare and tech, and just a great quality of life city. We're seeing a lot of population move to. It's pretty pricey from a, sort of investment perspective. So again, it's always overlaying, we like this market, but how can we buy it? So we think Nashville is really interesting at the right price. And there's some near-term supply that has to work its way through the system. But again, on a longer-term trajectory, Tampa, Nashville are two of the markets we like a lot. And then I'd add Raleigh maybe as the third. I think Raleigh has, great, sort of education centers nearby that are feeding a workforce there, that are feeding growth in technology. So we see a lot of growth in Raleigh over the next few years as well.
Very cool. Yeah, I always ask people that come on the podcast which markets they're most excited about, and they always tend to cluster in the Southeast, in the areas that you talked about: Tampa, Nashville, Raleigh. I had a guy he talked like 10 minutes about Jacksonville. He just loved Jacksonville. He thought it was just gonna explode. So it seems like the Southeast, that's where it's at when it comes to investing and building a portfolio. Awesome. So we have gone through the initial 10 minutes. It's time to jump into the quick question round. Are you ready?
Sure. Let's do it.
All right, let's do it. It starts with books or any form of education. I need 2 recommendations, one for general life wisdom and then one for real estate specific.
Okay. Real estate specific, we're building a project in Cape Coral, and there's a book called Swamp Peddlers. It's an interesting book about real estate development and specifically about Cape Coral. So for me, that's very interesting because of that project. So I'd recommend it. Well written, very interesting.
It's a catchy title too.
Yeah, absolutely. Swamp Peddlers. And then, as like a general, more general business book, I really like Barbarians at the Gate, sort of an interesting view into, real titans and, the sort of corporate takeover world. And I think that was a very interesting book.
Yeah, I've heard of that. I haven't read it yet, but I've heard good things. Next question is for your younger self. So let's go back to the Doug who was, just building that real estate investing club back in college years. Go back to him, look him in the eye, give him one piece of advice moving forward.
Sure. I tell people this all the time. It's, never eat, and I'd call it breakfast, lunch alone. Like, I think all of these meal segments are a chance to, whether it's within your company, if you're a larger company, whether you're meeting other brokers or owners or people in the market, the real estate world is a absolute social animal. And so get out there and build your network over, breakfast, lunch, coffee all the time. And again, within your organization, it builds better relationships to get things done together, not just have transactional relationships to find new deals. It's really important. So I think you got to get out there and meet people.
I love it. One of the books that I read in college, it was called Never Eat Alone. I think it was by Keith Ferrazzi or something like that. And the entire book was about that concept, is that, every business, especially in real estate, it's built on relationships. And the easiest way to build relationships is to eat with each other. So I like that idea. I think that's really good advice to give your younger self. All right, that moves us on to the next question. This is about your business. It all starts, our businesses are run by the people we work with, and it all starts with the first 3 positions you hire. So what were they for you, and would you do it in a different order if you did it again today?
Yeah, no, it's a good question. Our first 3 positions were, sort of a VP of investments acquisitions, sort of similar like VP of development. And our third has been sort of our CFO controller. And I'd say, the path of hiring them that way made perfect sense. I mean, the first thing we needed was sort of building out that acquisition function to have deals. Then we needed a development function to sort of deal with the amount of development work we had to do. And then I'd say the third one, the control, the real CFO sort of finance role more came out of just, we brought on a gentleman named Joe Nestler, who is a good friend of mine and was just an excellent opportunity. He was a director at East Still for a long time, investment banker, a really smart guy, and was sort of interested in joining what we were trying to build. And, if you have the opportunity and you have the right role for someone that you've built that 10-year relationship with him, it's really nice to be able to bring in someone like that who you really trust and you can leverage.
Awesome. All right, I'll use that as a segue to the next question. You already mentioned the first position you hired was VP of acquisitions, because it always does start with finding the deal. It starts with getting in contact with the seller, hammering it out, getting it under contract. So what is your favorite way to find good deals?
Oh man, it's an interesting question. I think it really depends on the asset class. I think for land, there's all kinds of crazy ways to find land. I mean, sometimes it's just driving around areas you think are interesting. It's checking like unexpected places. Like LoopNet may or may not be unexpected, but, we found, 100-acre deals on LoopNet that are really interesting, or like Zillow, like weird, like misplaced commercial ads is interesting. So I think you really have to be active. We try and buy deals that are, call it $50 to $200 million in total transaction size. So at that level, it's hard to find so much off market. You still can in developments, you can, but when you're buying those larger existing deals, you got to develop this network of brokers and owners that help direct stuff to you. But yeah, with land and some other stuff, there's all kinds of creative way to get in there.
Yeah, it is funny where deals come from. Sometimes it can be completely random. I've gotten deals off of deals that we already closed. The seller sent us deals that they knew some of their friends owned property, and so they sent us more properties. And so, comes at a. I've
gotten a deal off of a podcast before. Someone heard me speak and had a piece of land that they wanted us to look at. So listen, even podcasts are great deal sources.
There you go. All right, next question is about mentors. None of us are islands. We all stand on the shoulders of giants. So give me one mentor who has contributed to your career significantly today.
Oh man, yeah. There's been, I've been fortunate in sort of at each role that I was in, having a great mentor along the way. So I mean, my first boss in investment banking is still someone I talk to pretty regularly, and he took me under his wing. And I was a liberal arts undergrad. I was like an econ major, but got dropped in investment banking and never touched Excel. So I had a lot of learning to do very fast. And he was like a undergrad finance guy, had been a banker for a long time, and sort of took me under his wing. His name is Paul, and he's still in the business, but he was a great teacher early on, and has been like a fun person to bounce ideas off of throughout my career.
Perfect. Well, shout out to Paul. All right, that leads us to the second to last question. This is about lessons learned. Not every deal that we get into goes the way we expected. A lot of times a wrench will be thrown into the mix there, and we got to figure it out and then get it done. So what is the biggest lesson learned through a deal that kind of went sideways?
It's perhaps like sometimes the best deal you do is the deal you didn't do. And, looking back at some of the deals that I, almost bought, and at the time was super disappointed when a deal fell apart. But then looking back, I was like, oh man, that would have gone horribly had I bought that. And I think, look, for a lot of people, obviously the office world has hit, tremendous headwinds. So, there's a lot of deals that at the time we might have said, oh, those are, really interesting, compelling office deals to do, but pretty glad at this point we don't have a portfolio of office deals in our company. So sometimes it's the ones you don't do.
Absolutely. Yeah. And sometimes, stuff like that, it would be really difficult to predict because who would have thought COVID was going to come around? So those ones that you just kind of squeaked out, you got to love, it was on your side at that point. Luck was on your side. All right, moves us on to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that? And then remind people again what you guys do and what they can expect when they reach out.
Sure. So we have a website, shorehamcapital.com, and you can email me at doug@shorehamcapital.com. We are a real estate investor. I primarily focus on residential in the Southeast, East Coast, Sunbelt. So if folks have deals, land, opportunity, looking to invest, we'd love to chat with you and see if there's ways we can work together.
All right, perfect. And I will put Doug's link in the show notes. So if you guys want to reach out, just click a little more in the description. It'll pull down that full description, and there you can find his company's link. All right, Doug, that wraps it up. Thank you very much for hopping on the show.
Thanks so much. Thanks for having me. It's great.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, all we ask, give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.